Hi guys, welcome to another episode. I'm excited as ever because we're going to talk about something that really affects your life, credit score. Sometimes you're buried with credit score. There are TransUnion, there's Equifax, there's something called Fico Score, and they're part and parcel of your life, especially if you're a real estate investor. But it's surprisingly, credit scores not only matter when it comes to real estate investment, it actually matters in your day-to-day life, even when you're applying for a job too. That's certain things that you don't actually think about. But today, what we're going to talk about is we're going to talk about how credit scores, the different types of credit scores, FICO, TransUnion, Equifax, and all that, and how it affects your day-to-day life. But more than that, we're going to take, as always, we're going to take a step forward and talk about more on how it affects your real estate investments. So my expert is on the other side, and I'm going to chime in whenever I had to. And but over to you, Venkat. The floor is open for you.
Right, yeah. So we always talk about like building wealth, right? So when you build wealth, it's not like it doesn't come out of the sky. And also, even you work hard, it's not going to happen
Right,
overnight. Like you have to take care of one thing that's very critical. That's a FICO score, right?
right,
Even like when you apply for a job, the employer actually wants your credit. They want to make sure like you don't have any bad thing in your credit. Like, are you
right.
managing your credit better? Are you managing your finances better? So this is the one factor that decides your financial
Yeah,
success. Whether you are a millionaire, a billionaire, or you don't like you starting from scratch, this FICO is important. FICO score is important, and it's like there are multiple algorithms behind it, right? So it's like there's so many calculations going on behind the scene that actually gives you the scoring algorithm. But what happens, like it's been evolving. It's been like evolving for a long time, right?
hmm.
Several years.
FICO
So they
score.
started with FICO score 1, 2, 3. Right now we are at FICO score 9. So but it came out like I think a couple of years ago, FICO score 9, but still people are using like a older system,
When
older
you, when you say
scores.
people, that means the lenders. Is that right?
Lenders, yeah,
The
anybody, like even like
employers,
employers.
probably.
Employers also might be focusing on one type of FICO
Mhm.
score, right? And mainly lenders, credit card lenders in real estate lending, or the credit card, or private lenders, just um, lending money, car loans, or any kind of lending, right? Every businesses, every employers, every lenders use different scoring algorithm in FICO. So like we talked about FICO score, how it's being decided, right? There are 5 different factors involved, like how much of a credit mix you have. Like, are you having a real estate type of debt? Another one is, are you having a credit card debt? Are you having a auto loan debt? So are you trying to manage like different kind of mix? Like the more mix you have,
Yeah.
it's better for you. It's like
Yeah.
like that's one factor, right? Another factor is length of the credit history. So how long you have that credit, like the older you are, most likely you have longer credit history, right? Like
Mhm.
uh unless you cancel the oldest one, right? That's a
Right.
bad mistake.
That's a very bad thing to do.
Don't cancel the 15-year
Yeah.
old credit card because you're not using it. Just use it. That's going to keep your, like, say for example, you have 15-year-old, you never applied anything until like last year. Maybe you got a 1 year credit history, right? 1 year old credit card, and then 15-year-old credit card, right? And somehow you cancel that 15-year-old. So what happens is you only have 1 year.
Yeah.
That the length of credit history will become 1 year.
and
uh,
and and it's very I mean, if you check in Credit Karma or even go to Equifax or whatever, you can check the positives that work towards your credit
exactly, yeah,
score,
those
right?
are good
Yeah,
points.
and the first one always I see is the length of the credit card, the oldest credit card, or the length of
But it's
your
only
history.
15% weightage, like in terms of scoring algorithm, right? It takes 15% of your length, 15%
2% of
weightage
weight. Yeah,
on
that's a
that.
lot.
Yeah, it's still a lot. Like if you have, if it's 850, right, you might get 85 points less out of 850, right?
Right.
Just on that.
Yeah.
Not 85, like actually 120, around 120, because it's 15%.
Okay.
So, and then another one is new credit, like how many credits that you're applying newly. Like you shouldn't be going above like 5 or 6 in last 12 months. That's kind of like a maxed out. But another thing, that if you are doing a shopping around mortgage, right, you can do it within 45 days period.
Yeah.
So that's another thing. And next one is that how much amount you owe, in like what is the debt, debt income ratio. Like say you have $100,000 income, and then no, $100,000 altogether. You pull all the credit cards together, right? Let's say it's 100,000,
So
and
your
then
total debt is 100.
total credit limit, and then
Oh,
the total
right.
debt is like $10,000. It's like 10% of credit
You've
usage.
used only 10% of your
Yeah,
full allowable amount of them.
right.
And what's the
So
optimum level? Is it 50%? Is it 25%?
30% is optimal, but
30%.
the lowest is better. That's why you always buy something, but you pay it off.
Yeah.
That means you're actually managing it.
Hmm.
The better you manage means the better you pay off all the debt. Keep using it, at the same time keep paying it, right?
Right.
That is what counts in this case. More transaction, more payment.
Yeah.
That's better. Another one is the payment history, like like
On
again,
time
like,
payments.
yeah, those payment history and the amount, how much the amount you owed, those
Hmm.
two are the heavy, like almost 65%
Okay.
weight, right? So I think we gone through this overall. Like there are different factors involved that decides your FICO score. But within the FICO score itself, like we talked about, so many different
FICO
scoring
1 through
algorithms.
9, right? And you mentioned that
Yeah.
right now it's the latest is FICO 9. But if you check, like if you go into your bank profile, like online profile, and you see check your FICO score, whatever, right? And what version are we checking? Is it 1 or is it 9? And if the lenders are still using 3, does it make any sense to check your FICO 9? How do we do that?
Right, yeah, that's a good question. Like basically, like if you go to all those banks that gives you the score, they are not real FICO scores. They
Okay.
are very close. They're called, I think, FACO score. I don't know if they're still calling that FACO,
Hmm.
FAKO.
Okay.
FACO score is like a fake FICO score. It's like it's very close. What they did was like even the Credit Karma, right? They used they kind of used the same formula that
Hmm.
the FICO use.
Okay.
Like for example, they, let's say they putting this 10% of that, 35%, all these things, they use the same formula, and they bring in all your stuff, and they calculate their own, right? So
Hmm.
sometimes it's like very lenient. It's not conservative like my FICO, right? Because of that, your score is a little bit higher.
Okay.
So the rule of thumb is like, you just reduce the, like maybe 30-40 points less than what they're showing in your
Okay.
score there, right?
And what most of the people are familiar is with the three famous credit bureaus, right? We talk about Equifax, TransUnion, and all that. So some people, including myself, there was a time that I subscribed to one of those bureaus and checking keeping a track of my credit score. Does it actually make sense anymore? I mean,
I
if
would
it
say do that myfico.com, right?
okay, my
Myfico.com is the real FICO
is it
score.
free?
No, it is not. The free, in terms of free, like annualcreditreport.com, it doesn't give you the score. That's a bad
Mm.
part. But right now, because of COVID, like you can actually pull your credit report. It actually have alerts and everything built in. So that even like somebody applied for your in your name, right? Identity theft happening,
Yeah,
and you'll
guilty
get
of
that.
yeah.
So that's annualcreditreport.com will give you a free one. It used to be once a year
Mhm.
for each bureaus, right? now once a week you can actually get a new one,
Yeah, and for free.
and for
That's the
free,
important thing.
right? That's only
And
credit report,
yeah,
no
just a
scores in
credit
there.
report, and it doesn't give the scores. At least you can see if there was any identity theft or any record that has anything under your name. So that's a good thing. Thank you so much.
Right. The best one, actually, I have the myfico.com, right? So it gives all three scores, all the scores like FICO 1 through 9, actually 2 through
Okay.
9, right? So it gives you that in myfico.com, it's 39.99 per month. Like if you have some issues with your credit, just sign up for that and monitor that. It's actually, you'll learn a lot of stuff from there. um, and that's what like it actually gives you the FICO score 8. Like for example, FICO score 8 is used for this. It'll tell you like exactly what it
Oh,
is used
that's
for.
very interesting. That's very
And
useful.
for mortgage, right, it's like for mortgage lending, FICO score 2 or 3
Hmm.
is being used. So
Okay.
that's why it's lowest. It's kind of a lowest, very strict, stringent score there. Sometimes you may see a mortgage when you apply for a loan, you get a score that's low
Yeah,
than
yeah,
what you
yeah.
see outside.
That's
That's
wonderful.
because they use FICO score 2.
Yeah.
That's what they have.
Yeah, because like I said, including myself, there was a time that I was going through this whole mortgage application process, and I was checking on one of the my score on one of those famous credit bureaus, and I had a relatively a better one. And when they pulled the credit, it's I was marginally above that 740 mark. I was like, what? I had it like closer to 800. This thing from this particular credit bureau, and so it makes sense now because of at that time I didn't know about FICO, and so now I understand why it is low because there's something called FICO, and mortgage lenders use FICO 2, and they're not really the other ones, or FICO 9, or even the others.
Right. Actually, the FICO 9 removes all the medical debt collection.
Oh, okay.
It doesn't give you that much weightage
Good
on the
information.
medical debt collection. FICO 8 is still being used. It actually uses the medical debt. So FICO 9 probably is the highest one among all.
And that's what you said. Like if you sign up for FICO, myfico.com, 39.99, you will be able to learn like what comes under
Mm.
what is being looked at under FICO 9, FICO 8, FICO
So your
7.
exact picture of your credit report, like, you
Yeah.
applying for auto loan, you're applying for this, even the auto score, like even the insurance, auto insurance, is based on, like, there's a Vantage score. It actually gives you which one
Right.
being used, and you can learn from that. Like, it might show you there is a issue,
Mhm.
and you need to improve that. If you improve that, there is a simulation actually.
Oh,
uh,
okay.
so let's say you fix that issue, right? Your score is going to go here, and you will get like better rate.
That's very good. That's very
um,
educational. I mean, 39.99. Maybe after a couple of months, after you think that you've learned everything, you can probably cancel it.
and people charge like thousands of dollars to
Yeah.
fix your credit.
Fix it. Yeah.
uh, and another thing is that there is a dispute, like right there you can actually dispute all of them. Like you have a issue with, say medical collection, right?
Yeah.
I
Yeah.
think we talked about it before in
Yeah.
another episode.
Separate episode. Yeah.
So instead of going to actually you will be going from here, from my FICO, but you can do it right there in my
Okay.
FICO dispute of all
That's
three
good.
credit bureaus. So there are multiple benefits to it, and I think credit score, like, you probably now realize that how important it is, because try to apply for a loan, just maybe $1,000 loan, having a 500 score, nobody cares, nobody gives anything about it, right?
Yeah.
Right. But if you, let's say you have above 740 is kind of a good one.
Hmm.
Above 740 is
About it. Yeah.
considered very similar, even whether you have 740 or 790.
It's the
It's
same.
very, same category, right?
Yeah.
So try to get to above 740, dispute everything, and you will see, how good rates, how good, like, loans you will be getting.
Yeah.
That's how you build your credit, like with the
Right.
lowest rate, the more loan you can get. That's a golden chance for you.
Yeah. Yeah. Absolutely. A lot of information, a lot of great information. Like I said at the outset, credit score and your life, it's like part and parcel, bread and butter kind of stuff. So it's really important that you keep a track of your credit score, not just for your investment purposes, but for your general day-to-day life as well. Because when you're applying for rental or when you're applying for a job, everything matters. Keep a track of your credit score, and if you have already not, just try out mycreditreport.com for free credit report.
I know.
Not,
Yeah, I know
that
credit
doesn't
report.
include scores, but just to make sure that everything is good. And if you're ready to spend 39.99, just and if you have, like you said, if you have any issues specifically, and if you want to keep a track or make sure that you do the right thing to eradicate all those bad stuff, go for that myfico.com, right?
myfico.com.
And
Right.
at least monitor it for a few months or a couple of months at least,
Yeah.
and
Yeah.
learn what is in there. And hopefully you learned. I'm pretty sure you learned something new. I did too. And like I always say, if you already knew this and forgot about it, use this as a reminder service. Thank you so much, guys.
Thank you, guys.